Hello there, MJ Traders. It's been a while since we've checked in with a public YouTube video. We're certainly still covering the space and trading the space, just a lot less actively while things settle in, and there's a lot of other opportunity elsewhere. But things are getting interesting after a third bounce attempt for the US MJ space. We'll look at that in just a second, and we're going to briefly look at Canadian MJ names. I've still been trading the Canadian MJ names a lot more, TLRY. I day trade it all the time, and that is because that's where the liquidity is. As we know, on the OTC, we don't have good volume. We don't have good trading opportunity because of the liquidity. A lot of people, most people that are going to be watching this video are more fundamentally focused than technically focused. I'm a lot more technically focused, definitely interested in the fundamentals, but also very sick of waiting for the government. So there will come a time where things change with catalysts and momentum, but right now the sector has been a bit slow over the last few months. And we also know that the sector is slow generally in the summer. That is probably the most clear seasonality pattern that I've ever seen in stocks after trading for 11 years. Slow summer and fall into the winter because of voting season is when the sector really picks up. So with where we stand overall, IIPR is a lead USMJ bull. This is the monthly time frame. We're going to start on the monthly time frames for everybody. And we're going to look at who's stronger and who's weaker, having nothing to do with fundamentals and everything to do with technicals. So IIPR set a monthly high or low at 160.91. We then held that support by less than $2, and now the monthly bounce is underway. And I've been tracking the growth stocks for the last 6 weeks, looking for them to bounce, and the MJ sector is part of the growth sector. And the growth sector, you just got to look at TAN for solar or XBI for the biotech sector. I guess we'll run through a couple of them. NIO in the EV space. The similarities with all these names are massive breakouts to all-time highs, multiple months of consolidation, EMA 12 support tests on the monthly, and monthly higher lows shaping up. ARKK is a Cathie Wood ETF, same thing. XBI, biotech sector, same deal. TAN, the solar sector, same deal. And we're watching for the same thing in USMJ. Now, USMJ has not been participating in this sector shift. This is a bigger picture rotation going on in the broader market, and it's not been participating nearly as well as these other names, which now are on week number 6 of their bounce. And we look at MSOS just as a gauge, and it's starting week number 1 of a bounce. And these past 6 weeks, right here, these growth names have been doing nothing but going up, and USMJ has been going down. And that's why you're seeing a lot of the frustration on social media. You know, a lot of people saying I'm long and strong and I'm buying the dip, and that's great, but a lot of people frustrated. And that's because the broader market's at all-time highs, and we're also in a point where we aren't positioned well for broader market consolidation. So SPY up at the all-time high. If we were to see any kind of loss of the weekly uptrend, and look at this weekly EMA 12, which has been holding for 6-7 months at this point. If we lose that weekly EMA 12, this sector is not positioned well for weakness because it's what we call a bearish correlation, where the S&P 500 keeps going up and it helps the sector a little bit, but hardly. But every step backwards that the S&P 500 takes, this sector responds to the bears. It's not really responding to the bulls well as far as the broader market and correlations, but it does respond to the bears. And it's not the same kind of correlation that you see in Canadian MJ because they are uplisted. There's more volume. There's automated bots and algos that are trading based off of what the broader market is doing, and you just don't have that on the OTC. So IIPR is one of our strongest US MJ names, in my opinion. It's not the business model. It may be a good business model. The financials may be fine. You know, whatever you think about the fundamentals, in my opinion, the only reason that IIPR is standing out as a lead USMJ bull is because it's traded on the NYSE, and it is benefiting more from the broader market strength that we've seen over the last couple of months. So could this be a monthly bull flag? I use fib retracements to gauge whether something is a flag or not. And looking at this big monthly bull move, this is a monthly bull flag still, as long as the 382 retracement is holding. And at this point, we have the EMA 12 as our guide above that level. As long as that is holding, it's a potential monthly bull flag. A possible scenario here, there's 3 scenarios. Number 1, monthly bull flag, new all-time high continuation. Number 2, fail to break the all-time high, monthly tightening range through the summer into the end of summer. And scenario number 3, fail to break the all-time high, break the low of consolidation, confirmed monthly downtrend. So obviously you know what the best scenario is for a bull and what the best scenario is for a bear. And we're going to be watching closely over the next few months for how this shapes up. But overall, the daily time frame up at the recent high here, and after 193.56, which we broke, and again, we can see this bounce has been underway for 5 days, whereas the MSOs have been bouncing for the last 3 days. And if you look at the S&P 500, you'll know why. It pulled back 2 weeks ago. It's been all bull this week. So after 195.78, it's 200, and then not a ton of resistance levels after that. So we'll watch 195.78 and 200 with anything above 182.61 as a daily high or low, keeping the bulls in control. The weekly time frame has not seen much consolidation over the last 6 weeks. You can see it's bouncing with growth. Again, pull up NIO. It's doing the same thing. NIO is one of our stronger growth names, but you pull up the biotech sector or the solar sector here, and we can see it's doing the same thing as IIPR over the last 6 weeks. So IIPR is benefiting more than MSOs because of where it is traded. So daily uptrend is our guide. If we lose the daily uptrend, we zoom out to the weekly and we anticipate a bit more significant weekly consolidation. And if we lose weekly higher lows, it's definitely a big red flag on the monthly time frame. But anything above 162.81, I personally would consider a weekly higher low. GRWG, weaker than IIPR. If you look at the percentage ground that has to be covered to get back to the all-time high, it's a lot more, but it's a very similar chart. All-time high, low of the pullback, we held the low, and it was a bounce off of support holding by less than $1, and now this bounce on the monthly is trying to take place. So because the bulls have a lot further to go to the all-time high, the probability is higher that we'll see a monthly lower high be the result of this bounce, and not just a V-shaped move to a new all-time high, unless there's some kind of massive catalyst with the government, which, man, it's brutal to watch. I've been watching it for 11 years at this point, started watching in 2010, and it is as brutal as ever. So, GRWG, weekly higher low set at 38.84 and 45.35, we did break it. So technically that's a weekly higher low and higher high. The biggest difference between it and IIPR is IIPR didn't even see that weekly consolidation. It was still going up at that point in time, which is why it is also a bit stronger. So daily time frame, you can see we lost the uptrend. Solid move. Anything above 39.51 is a daily higher low. Overall, it's a bit more choppy as far as what to be looking for on the weekly time frame. Or I should say the daily time frame is more choppy. Right now I'm just trying to pull up. Sometimes I do analysis and patterns just stand out to me. So this looks like a potential rising wedge on the 4-hour chart. Bull breaks not seeing much follow through. There is an uptrending support line, and these are bearish reversal patterns. So we'll keep an eye on that and see how this resolves itself potentially next week. It eventually gets real tight. Can't stay in it too long. So MSOS, the ETF. So the way I've been playing this sector, again, day trading TLRY often, but MSOS, I've been very, very patient and just taking tiny nibbles. And we've had some big time bounces. You know, the percentage moves here have been notable, but they've lacked follow through. We just haven't been able to confirm any daily trend changes on any of these bounces. So here's a bounce of over 20%, no daily higher low and higher high. We gave it all back. Here's another bounce of 15%, gave it all back. Another bounce of 20% plus. Higher low, this was close. This was the closest we got. Daily bull flag attempt, and then we rolled over and couldn't see it break. And then we just dropped to a new fresh low, 37.34. Whenever I see bear breaks with a lack of follow through, I scout falling wedges. And this isn't a great falling wedge that I can draw as far as a support line to be watching. You know, I want it to hit at least 3 points, and we're not really seeing a clear spot for it to do that. There's a downtrending resistance line that we are at right now, and I would draw it here and leave this price action out, just because if I were to draw it up here, you know, I would be looking at, I wouldn't get as many hits as I want, essentially. So if I'm just starting from the initial big bounce, and I'm hitting the high of the last few bounces, we are right at that downtrending resistance line. So what matters more to me than these resistance lines is price action. Because again, we have not seen a clear daily higher low and higher high on MSOS since the all-time high. Every bounce results in a lower low. So that has to change this time. Solid volume. We've had solid volume before. Anything under 42.06 is just a daily lower high. Where the bulls have to prove it is holding this low of 37.34 and then confirming the daily trend change and breaking 42.06 as well to see the follow through. The monthly time frame looks fine. As far as the lower wicks, the bulls just really want this to be the higher low, because the further we pull back, then the more likely we trade within this monthly tightening range for a long time and the sector stays boring. Again, obviously all of this is barring any kind of significant fundamental change or catalyst. So, scouting the monthly high or low, bulls have a lot of proving to do. So I have been taking small positions on these bounces and giving bulls a chance, but also I'm just not bag holding. I'm bailing real quick. I'll take small losses all day to not have capital tied up. But I re-entered more on, I believe it was Monday. Entered at 37.92. So I've got a very comfortable position right now. And if I had a larger position on that entry, my plan was start scaling in. Why? Daily RSI has bounced off of 30 multiple times after big time bear control. And again, you see the sentiment on Twitter, and it's just the slow grind down, and everybody gets frustrated. And that's happened twice already in the past few months. We hit 30 RSI, and the scales tilt, where supply is outweighing demand the entire time down, and that's why you're stair-stepping down, and then it just gets to a point where it does this. And you can go back and look and say, well, what is the catalyst? You know, we had a tweet showing the potential of MJ language being added to other bills. That maybe is a little spark, but really it's just the supply and demand. And that's the way that markets work most of the time in the absence of any news catalysts. So we reached a point where people like me recognized the conditions and started buying for the first time in a long time. Zero buys for me at any point in the last month, but I bought on Monday because the daily RSI was oversold, and my plan was first entry here, 37.92. I'll enter another one if we straight drop down under 37, and I was planning on scaling into extreme conditions if we got there. I only got one fill. If my position were larger, I would be selling half of my position today, and I would put my stop under the low, and I'd have no risk. But my position is of size where I'm just going to give the bulls a chance. And, you know, I could set my stop at break even, but I'm going to put my stop under the low and give the bulls a chance to change the daily trend. They've let me down multiple times, but just keep that risk small. And I have the possibility of nailing the monthly higher low before a bounce. And if I'm wrong, very small loss, which is what trading is all about. So, have to change the daily trend. Individual names, GTBIF is a lead technical bull because we just had a very nice break of a tightening range. This was a weekly equilibrium. We had the low of the pullback, high of a big old bounce, higher low, lower high, and you can see the last 6 weeks just sideways. Most important support for me on the weekly chart is 28.20, and we broke key resistance of 30.70. Now we're looking at 33.90, and if we just look at the daily time frame, just the fact that GTBIF here is seeing prices, we are at prices that we were at in early May. If you compare that to other names, you know, where was MSOS back in early May? We were up here in the 42 to 44 range. So we're still 5 to 10% below that mark. And again, we compare our individual names. We'll do that in a second. We're looking for anything above 28.30, 28.20, I should say, to be a daily higher low. And bulls just want to maintain a daily uptrend, and they want to see MSOS, the ETF, confirm a daily trend change as well. Once we clear 33.90, we then have limited resistance. There's not a ton of resistance up at these levels. So a nice clear shift, just tightening, tightening, tightening. And then this is the scales, supply outweighing demand. And as we equilibrium, we're just doing this and getting level, 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 and then they tilt. And so that's what's happened on this break this week. CURLF, same thing. We're looking for the monthly higher low. The weekly time frame had a bear break, but we held the low of 12.15. So this was a clear, notable drop, and just comparing to GTBIF, very different last month of trading. So we have to change the daily trend bull. We came in a V-shaped bounce from a big drop, but we must see a clear higher low and higher high to then be in a daily uptrend with 1547. Actually, this is one other reason why I don't like the OTC. This 1547 level doesn't mean anything to me because the OTC market makers just open things. they can open the price where they want because there's no pre-market action dictating these opens. So as far as I'm concerned, we had a wall of resistance at 1533, and we never broke that wall. We opened above it, yes, but we opened above it, and then the first hour of trading, we just dumped right back down below it. And you'll see a bunch of individual names where it's the same thing, these opens. Like this open down at 2850, it's a joke open. It's illiquid, and it's allowing these market makers to do what they want, which is another reason that traders like myself want that liquidity, want extended hours trading, and want uplisting. Everybody wants uplisting in this sector. I will be trading when this sector is uplisted. The dollar volume that I am contributing will be tenfold. And I am one individual, and there are many, many people where that is the case. CURLF, daily trend change needed. TCNNF, monthly high or low attempt. We've been fading a good bit. Bulls really lost their momentum once we had the deal announced, and we've been settling in on that deal. And then we had a little bit of a bounce kickoff with Kim Rivers, CEO, doing some on-the-market buying. But bigger picture, weekly time frame, we've got a low of 34.52, a high of the bounce at $44. That is our range. The Bulls just held 34.52, just barely. And now we're looking back up at that key resistance, $44. If we don't break that resistance, it's entirely possible we trade within this range for another month or two. And again, there are plays off support. You know, if you're looking at 34.52 and you're making an entry at 35.52 and risking $1, there are plays to be had off of support on some of these pullbacks. CRLBF, and here's another one where this wick down to $9 isn't real. It didn't happen. The low that day was something like 11.10 or 11.15. So we just came from the lowest point of consolidation. And that makes it one of our weaker MSOs, technically speaking, because none of our other names just hit fresh lows, where Cresco did. We got a clear downtrending resistance line that we can keep an eye on. Long drawn out downtrend. We're coming right up to it. And again, it's another name that because it's coming off the low, like Curaleaf, I should say a pullback. Curaleaf didn't break its low back here, but we need the daily trend change. Same as MSOS. Have to change that daily trend to shift momentum. If we bounce and then give it all back and fade, then bulls prove nothing. If I am loaded to the gills in USMJ, I'm looking for hedging positions. And I can be long individual USMJ, and I can short MSOS. There's many different ways to protect yourself when trading this sector. So I see this big bounce, and I say, well, if the bulls don't prove a daily trend change, I want protection against that. And maybe I short MSOS once we top out on this bounce and put a stop right above that high. And all I'm risking is, essentially, I call that insurance. I'm paying for some insurance because if I stop out of that hedge, that means a daily trend changed. And that means my holdings that I'm not selling are going up. And yes, I get back a little bit of profit because of the stop out in my hedge, but it makes for a lot better sleeping. So CRLBF, daily trend change needed. And you can see now, comparing to these other names that came from a fresh drop and still need a clear trend change, GTBIF is in a much different setup, which is much more favorable to bulls. TRSSF, I'm not going to cover all the other names, CXXIF, they don't have enough volume for me. And TRSSF barely does. And that's just, nothing against the fundamentals. They are higher risk and higher reward. So, if you're investing in these names and looking longer term, they go up and down percentage-wise a lot more significantly. So, for me as a trader, if something is not trading with enough volume to be tradable, then I don't care what it's doing. And yes, it could have some nice big gains, but it's of no interest to me. And I want to see a minimum of $5 million a day. And TRSSF doesn't have that. But here we have the low of consolidation at 893. And just like our other names saw, Curaleaf and GTBIF, they want that, or not, that's not a bad example. It was IIPR and GRWG. So the monthly low and then a higher low. And TRSSF is hoping to have that higher low scenario play out here. 893 key support. We held it initially, but the bulls must get over $12. And that's the range that we've been in for over the last 3 months. So we care about 893, the most important resistance, and $12, $8.93, the most important support, and $12, the most important resistance. We just held support, so again, another play off of that support level. And now we're going to scout a lower high compared to $12, at least initially on a bounce. Honestly, just knowing the seasonality of this sector, if I'm a longer term bull, I just want you to keep trading sideways until the fall gives us some spark, if we're not going to get a spark until then. And just don't break those lows on the monthly and open things up again to further downside. That would be my hope. But it's a long while. We got another 3 months until September. A lot can happen in 3 months, especially broader market weakness. If we see any notable broader market weakness, in my opinion, these names will be right back down towards those lows very quickly. So Canadian MJ is different. CGC is looking for a monthly high or low. Its peers have already formed a monthly high or low, but we're just then looking for a monthly lower high because of the size of this pullback. And again, trading opportunity through the roof over the last bunch of months in both directions. And that will change eventually, but not until there's uplisting. Monthly inside bar on CGC. Decent bounce. Again, S&P 500 is dictating this bounce. If you look at SPY, it dropped last week and it V-shaped bounced this week. So here we have CGC doing the same, but obviously the V-shaped bounce not nearly as powerful. But the bulls will have to confirm a daily trend change if this bounce is going to have follow through. And it's another sector that's not necessarily positioned well for if SPY were to see any consolidation. If we were tick for tick with SPY, we'd be up here right now. Obviously, that's not the case. So have to change the daily trend, and 2172 is key support. And that's another thing. You can hedge by shorting. I posted in the chat room today. Pull this up real quick, then I'm going to answer a couple questions from some members about bigger picture stuff. So daily and blah, 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 blah. So aggressive bears scouting a TLRY hourly lower high versus 1868, which was the high of yesterday. Remember, you can look to hedge any long USMJ swing positions by playing Canadian MJ. They have similar correlations. They're obviously very different at times. But if I know I'm not going to sell my MSOs on the bounce, then I can give, and I want to give the bulls a chance for the daily trend change, I can scout a bearish TLRY or CGC entry. So today, TLRY high of yesterday was 1868. And we opened this morning and we got up to 1837. So that is 31% or 31 cents, less than 2% from the high of yesterday. And if I want to protect, I can enter bearish, put my stop over the high of yesterday, and I have a solid green day today while some USMJ is pulling back. MSOS is red and TCNF is red. So again, that's just one strategy. If you are a more active trader, you can use the other side of the border here that does have the liquidity and trading opportunity to make those pullbacks a little bit less painful. So TLRY, we can see, started its monthly bounce, but it's a weak one here. And those lows of last month back in May are very key. And same thing, we need the daily trend change. We had a big drop, decent little bounce, but we must confirm a trend change for any kind of bounce follow through. ACB has had a lot of bullish trading opportunity since it bottomed after earnings. That was a clear period where the scales tilted and we saw a very significant move up. Really nice double top up at that high there before a notable pullback. But we are just looking for a weekly high or low on ACB. So some of these setups do vary, and ACB will need a daily trend change back in their favor for a weekly high or low to be established. So definitely trading opportunity in Canadian MJ, but I'm more interested in watching these monthly setups on USMJ. So a couple questions to answer before we go here. How did I used to play MJ and how I play it now? What have I observed over the years as the sector matured? What am I doing differently this time around compared to last time? So honestly, I could spend 3 hours talking about that question because I started trading back in the penny stock sector on the OTC. Penny stock, there were only 6 of them. USMJ companies 2010. Obviously trading penny stocks when there's only 6 of them, very, very different. That was all just hype cycles and press releases. And then it morphed into, there was a big run in those names again in 2013 or 2014. Huge gains. I'm talking, 1,000% plus gains. And that really gave me a big cushion of the capital that I used to become a full-time trader. And I had luck to just stumble into that sector to give me 500 to 1,000% gains, to give me capital to then say, okay, time to really learn what I'm doing here. But then we morphed into 2017 Canadian MJ, and we had the big blue sky breakout run. Honestly, every single sector and situation has been so unique that there's not really much comparing to do. And in this scenario, what was the last part of the question? What am I doing differently this time around compared to last time? So last time around, I was extremely aggressive. I took my crypto profits from 2017, rolled them right into Canadian MJ, and I was swinging positions on high of day closes, and the size of those positions that I was swinging is 400 to 500% higher than anything I've swung in the MJ sector in the last year plus. I was real aggressive because we would close strong, and it was almost a 90% chance we would gap up and see new all-time highs. And it was just a scenario to play really aggressive as a bull. And since the top, and we had a clear sell the news event on first days of sales in Canada, and since that top, it's been all short-term mindset for me. I do not have a long-term mindset in the sector. I know I will be watching it long-term, but I don't establish positions. I don't like drawdowns in my account is really what it boils down to. And so bulls make more than me on the way up because I'm jumping in and out. But I make a lot more on the way down because I'm not giving any profits back. And that was the case for Canadian MJ. And we'll see how it ends up playing out in US MJ. But it's just all about uplisting. I believe we will uplist eventually. I have no idea when. We will uplist. We will see hype and euphoria. Absolutely. We're going to see the market makers and the hedge funds. They're going to establish their large positions. There's going to be euphoria. There's going to be potentially a federal catalyst. Who knows what the catalyst will be, but the big money will be behind the move, and they will absolutely look to do the same euphoria move that Canadian MJ did, all-time highs, all that good stuff. Second question is, do I expect a bubble on par with 2018 Canadian MJ in terms of multiples and evaluations? I expect a massive run. I expect it to get overextended, and I expect to pull back 40%. For months from that top. I have no idea if that's going to happen in 2022 or 2027, but it will happen because that's the way every hype market that I have ever played goes. Crypto, MJ, 3D printing, it all plays out the same way. So we just have to wait for big money to be allowed to play, big money to establish their positions, big money to run it on some fundamental hype that helps run it, and then we see a rug pull, and that will happen for sure. So I am confident that I'm going to make a lot of money in USMJ when we see uplistings, and I'm not in a rush in the meantime. And again, I'm very different than many of you that are watching this, who are based on fundamental, and you're buying and holding, and I do this every single day, full time, and I am maneuvering in and out all the time, and it's a lot more active. So we just play the game differently, and there's nothing wrong with that whatsoever. So I look forward to the opportunity that will present itself in USMJ. But again, it's a long, slow road. And Schumer, his tweets, good Lord. I mean, it's just banging our heads against the wall. Things definitely happened on a state-by-state basis faster than I thought they would in 2010. But federally speaking, man, if you told me in 2010 that we'd be Schedule 1 still and we'd be where we are here 11 years later, I would be extremely disappointed. A lot of work still to do. But something to pay attention to. And we'll continue to do, I'll do more videos when that action picks up again as far as significant trading opportunity. Because again, you can watch all the fundamental videos you want. That's not my bag. It is the trading. And I just don't have the trading opportunity on the OTC until we have the liquidity to use significant capital. And it'll be fun when that happens. I'm now rambling on. Hope you have a good rest of your weekend, start of your weekend. And don't forget to do good things.